Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a Form 8K filing from AlloVir. Get ready because this report is about a merger and it involves a lot more than just saying I do. In short, AlloVir held a special meeting for shareholders about merging with another company called Accession Therapeutics. There was a vote on whether or not to go ahead with the merger, as well as some changes to the company's stock option plan. Let's break it down. First, let's find out who AlloVir is. AlloVir is a company and they're based in Lexington, Massachusetts. This report is a legal document, meaning AlloVir is telling the Securities and Exchange Commission, the SEC, about important events that investors need to know. In this case, it's about a big change. They're planning to merge with Accession Therapeutics. Now, what's this merger all about? Basically, AlloVir and Accession Therapeutics have agreed to combine their businesses. It's like two puzzle pieces coming together to form a bigger picture. AlloVir is buying Accession, but instead of paying with cash, they're using stock. This means Accession's owners will become AlloVir's owners. Okay, so the stockholders had to vote on a few important things. One was about the company's stock option plan called the 2020 plan. They wanted to make some changes to it, which is like updating the rules of the game for giving employees company stock. The goal was to approve AlloVir issuing more stock. This is needed to buy Accession. If you want to get more technical details, there's a more complex document with all details regarding the plan available on the SEC website. It's called a proxy statement. Now, the big question, what did the shareholders decide? AlloVir held a special meeting on March 12, 2025 to vote on these proposals. Think of it like a school election, but instead of class president, they're voting on company decisions. At the special meeting, a bit over 3.9 million shares were represented in person or by proxy. It's like having enough people show up to vote to make the election valid. This detail ensures that the vote was legitimate and that the shareholders had their say. The first vote was about approving the merger because the stock will represent more than 20% of the outstanding shares. Basically, they needed to ask the shareholders to dilute themselves more than 20% to make the deal work. The shareholders approved this and the merger got the green light. Here's the exact results of the vote. 3,543,715 voted in favor, 368,843 voted against, and 28 abstained. So overwhelmingly, the shareholders wanted to go forward with the deal. The second vote was about making changes to the AlloVir 2020 stock option and grant plan. They voted to increase the number of shares available under the plan, set a new maximum for incentive stock options, and extend the plan's term. The second vote numbers 3,264,056 for, 646,48,477 against, and 307 abstained, another win for the company. The third thing they wanted to vote on was whether to delay the meeting to try to convince more people to vote. Since the first two votes passed, that was unnecessary, and they didn't present the idea to the shareholders. To keep everyone in the loop, AlloVir issued a press release announcing the results of the votes. It's like sending out a news bulletin to let the world know what happened. If you're interested in seeing the detailed numbers, take a look at the exhibits in the filling. In this section, they included additional documentation. Of course, there's always some legal jargon to cover. AlloVir included something called forward-looking statements. This is where they warn that things might not go as planned. It's like saying, we hope this works out, but we can't promise anything. It's very important to read what risks the company presents here. There are so many things that could cause the merger to not happen. It includes approvals from the government, how AlloVir does as a company, and how Accession's pipeline does. Finally, there's a disclaimer saying this report isn't an offer to buy or sell stock. It's just information, not a sales pitch. Now, let's step back and look at the big picture. AlloVir is betting big on this merger with Accession Therapeutics. The company believes that bringing these entities together will yield positive synergies and unlock new opportunities for growth. The shareholders voted for the merger, meaning they likely share this belief. However, it's always essential to consider the risks involved. Mergers are complex and there are no guarantees that they'll go as planned. We should keep an eye on the financial performance of the merged company in the coming years to see if the decision will ultimately lead to a promising future. One notable point is that AlloVir had to dilute its shareholders quite a bit to make the merger happen, which is like cutting a pizza into smaller slices to share with more people. While this allows the company to acquire Calaris, it also means that existing shareholders own a smaller percentage of the overall business, something to consider for long-term investors. Overall, this filing is a window into a significant strategic move by AlloVir. The company is clearly aiming to expand its reach and capabilities through this merger. The success of this venture will depend on how well AlloVir can integrate Calaris' operations and capitalize on the potential synergies. Only time will tell if this bet will pay off. Thanks for watching. If you found this video helpful, please give it a like, leave a comment and subscribe for more deep dives into the world of corporate filings. Until next time.